active throughout the session to also monitor hand raising, because I will not be 100% on this page to see who is raising their hands. I would want someone to nominate and volunteer himself to his or herself to draw my attention when someone has a question. Please, someone should just raise your hand. Let me see a volunteer, please. A volunteer to draw my attention to questions during the session. Any volunteer? Any volunteer, please. Someone should just raise your hand if you are going to follow through judiciously so that I can appoint you as my assistant monitor today. Okay, nobody is volunteering, so I'm going to shoot. Okay, additional, thank you very much. Thank you very much. I see you. So draw my attention when there's question, when there's any concern, right? So let's start off right away. We have an average of 10-15 minutes per question. It's a marathon. So if you can see, I'm sure you all can see my screen. I'm sharing a page that has really cost and decision making as question 2, May 2023. Are we on the same page? All right. So let's start. I'll share my entire screen again so that you can see my workings and you can also enjoy the class. Please, additional, lower your hand. Thank you very much. Okay. Share my entire screen. Infinity screen is up. And you all can see we are on May 2023 question 2, relevant cost and decision making. So let's go to May 2022. Is it May 2023? Yeah. To relevant cost and decision making. All right. This is question 2, 2023. I want to first of all believe that in our studies we've attempted to read about make or buy decision. This is not a class to teach, but you already understand that make or buy is a situation where a company is given a contract to supply goods and services, and you have an option to either make the material or buy. So they are giving a quote and all of that of the price contract and all of you have the choice of making the goods yourself or selling the service to buy that part of the deal. So whichever favors you most, you need to use the marginal cost intake to check the marginal cost of the goods that you have been asked to supply, however the case may be. So there are 5 qualitative factors to be considered when making a make or buy decision. These are stories. I expect you to read them up. Honestly, we don't have time to solve the questions. So let's look at BBY Limited. That's the B part of the question that says BBY Limited manufactures jugs. They have just got an offer for the supply of the same product at 500 naira per jug. The plan is to manufacture 5,000 units within the next 3 months with the following budget. You can see the budget before you. The special offer customer will pick, and the special offer customer would pick up the products from the factory. So that means, advise the offer using data above. You have to support your computation and decision with appropriate reasons. The second question says, would you have made a different decision if the budget figures are as presented below? So that they've given us a different a different budget to work with and to see if we'll have a decision of make or buy similar to the first. So let's jump in this one. I'll start the I, which says we should compute if we should accept or reject the offer using the data above. So follow me to my writing pad. If you're not familiar with this is a writing pad. I do my writing here during my classes, and I'll share the lecture notes with everyone. If you have questions, please ask as we move on. All right. So I call this BBY Limited. I'll first of all write the year that we are solving, similar to the material I shared before you, and shared to you rather. And that's May 2023 question 2. So I'll do this. I'll say May. Very simple. So if the total marginal production cost is 2.3 million, then let's see how many units were we asked to produce. The plan is to manufacture 5,000 units within the next 3 months with the following budget. That means the marginal production cost per unit is what we are going to benchmark against the offer price. So what is the marginal production cost per unit in this case? Marginal production cost per unit, marginal prod cost per unit is equal to 2,300,000, that's 2.3 million naira divided by 5,000 units. And that will give you, if you punch your calculator for me, I need someone to throw me an answer so that I will not be alone in this ministry. Members in the house, punch for me and figure me. We have so many questions to cover. I need agility. Am I alone in this ministry? Then I should pay my tithe and offering myself. All right. Divided by 5,000, I have 460 naira. 460 naira per unit. All right. So this is our decision point. We have to compare 460 naira per unit to the 500 naira that we had in offer. So your decision is marginal cost $460 is less than 500 naira offer. Therefore, accept or reject. Okay, I'm alone.
You accept.
Accept the offer. Fantastic. Thank you very much. So quickly, I will split my screen and solve the next one just beside it. We'll have a long way to go again. Using, what did I say again? Let me remind myself. Would you have made a different reason if the budget figures are as presented below? Now they have given us a different budget. Let us work with this now. Yes. My light just went out. Right. Okay. Let's fire on. Yeah. So we'll go again with our marginal cost computation. We have a direct. This time around, they have added variable admin overhead. You know why we're ignoring this selling and distribution overhead? because there is a caveat that says the special offer customer would pick up the product from the factory. So I'm not going to incur the variable selling and distribution overhead. Are you with me? So therefore, let us move on. Let us move on and say using budget 2. Using budget 2. Z, right. Direct material. Everything in Naira 000. Direct material, I recall I saw something like this. Direct labor, I saw 925. And variable production overhead, I saw, 645. So let me fill up. Direct labor, direct, no, it's not direct. Variable production overhead. Variable prod OH. Write in full in your exam, please. Thank you very much. Variable admin overhead. Variable admin overhead. All right. We have 430. Add up. My calculator says 1030 plus 925 plus 645 plus 430.
3,030.
3,030. All right. Please give me a minute. Okay. Thank you for the minute. I'm back. Okay, so the marginal prod cost per unit is equal to 3 million divided by 1,000 units. This looks like 606.
606.
Yeah. All right. So obviously it is more expensive to go with budget 2. So if budget 2 is what we had to work with, the advice would be to do the opposite of what we did earlier. And that's what?
Reject.
Exactly. So reject the offer. So the reason you are rejecting is that you add all these stories. Marginal cost 606 under budget 2 is less than 500 naira offer. Reject. If you can do this, you have secured your full marks for this question. Okay. Without wasting much time, for me, cost estimation is a simple topic. I really don't like wasting time on it, but let's do them last. Cost estimation. We can do accounting for overheads. I think some people have issues with overhead apportionment. So let's do the accounting for overheads. Then we jump to marginal costing. After which we'll do budgeting. And okay, we'll move on from there. Then I'm interested in modern accounting technique. Then the specific order cost. Inventory valuation, we can do it last. CVP analysis, we can also do it last. These are formulas, you can always, practice them. But yeah, I aim to complete this thing, but at the same time, I'm keen on doing the ones that seem to be difficult. So for accounting for overheads, let's trash May 2022 question 1. All right, overhead apportionment. shouldn't be much of an issue. But yeah, here we go. If you can see my screen, I'm displaying question 1 from May 2022. It's all about a small manufacturing company which has 3 production and 2 service departments. The following data were extracted from the company's record: rent and rate, electricity, canteen expenses, maintenance expenses, stores expenses, and the basis of our allocation or apportionment, as the case may be, would be area occupied, energy consumed, number of employees, number of requisition, plant value, and the apportionment rates given to us are given as it is in the question. You are required to prepare the overhead analysis allocating and apportioning cost to the 3 production departments and giving the last 4 digits from the reciprocal apportionment to the spinning and weaving department. So, all right. So by the time you allocate, when you do continuous allocation and you continuously allocate the service departments, which happen to be maintenance and stores in this case, to the 3 initial departments, they have told you now that give the final decimal points to spinning and weaving, right? All right. So at least they gave you a sense of direction in solving the question. This is a 20 marks question, and it was May last year diet. So, well, I don't know the chances of repetition, but for the purpose of completeness, let us solve. Over to my writing board again. The question we are facing is, let me rule a line to separate this one. I should have used the red line, no, but let me just use this line to separate. All right. May 2022, question 1. No need. All right. So, my approach to this, usually, I start off with just about what is already on the question. I don't usually put my column for total, but for check and balance, you can decide to put that. Yeah. So let us just include everything that we see there. So we start with rent and rate. Rent and rates. Next one is electricity. Next one is canteen expenses. Electricity, vibes on the frequency. Canteen expenses. Who used to eat in the canteen? Staff. So number of employees is a fair basis of apportionment. Now we face maintenance EXP. Stores EXP. Okay. Thank you very much. Light is back. All right. So we have in Naira the total. And what do we have here? We have a total rate of 6 million, electricity 4 million. Electricity, canteen 120,000, expenses 2.7 million. Maintenance expenses 278 rather 2780123. Stores expenses 1100 141,000. All right, and we've been giving maintenance expenses stores, can't allocate to each other, right? So when we get to that bridge, we'll cross it. Yeah, so let's continue. Spinning and weaving first. So sorry for this error in writing. I'm supposed to put my total before my naira sign. Thank you very much for not correcting me. All right, so spinning and weaving naira. Next one is processing naira. Finishing, don't mind my bad handwriting. I'm not a doctor, but I write like them. Maintenance, sorry, my writing pad is crying for changing. And stores, there's space for everything. Okay, so the initial allocation. So what I do, I call the first one allocation. That is what it is actually. So when you when you're using the existing rates for your portion, right? But then you have to apportion on the basis of you allocate rather allocate basis portion. So let us allocate on the portion. So apportionment, which is we use area occupied. The area occupied is 12,000 square meters. And spinning with 3,500, processing 2,500, finishing 3,000, maintenance 2,000. So there are two ways to go about you use our curve. So to do I have to by dividing what I get, I apply on the total amount. What I mean by that is, let's go and do small workings. Let's do small workings here. Feel free to work in your question paper, provided it is neat. Do your workings. It proves that you know exactly. So let's go to small workings. To allocate rent and rate, what you need to do is what? For the first one, spinning and weaving, you do 3,500 divided by 12,000 equal to 3,500 divided 12,000. All right, it's giving me 0.29 bobotibo. That's what you use to multiply what? Equal to, use to multiply 6 million naira. It's giving me an absolute number of 1.75 million. All right, so that is how I go about my apportionment. So without writing subsequent ones, I can be getting values for the rest. You already know what I'm doing. So let us fill up the rest. You can throw the numbers to me at random. I'm very open to receipt. So you can give me a rate, finish a rate, and then get like that. No option, no, multiply directly with whatever you get out answer, divide. So you get to error. And 2 means like meaning it to write the exam. Okay, to write the exam. 1,500 for
finishing.
For who? Fantastic.
Finishing. 1 million maintenance.
All right, maintenance 1 million.
Store 5,000.
Stores. How much?
500,000. 100,000.
500,000. What broke the part? So let's go again. Electricity should be on, or what is this? Someone should tell me how for your prepaid energy. Let's do. We have it. Give me the energy. 10. Just 4 million. Let's go. And then you and
1.6 million.
Billion. This 1.6 million. Okay. Hey, one chance. 1,620,000. How would that now? 1 million. 20. I'll write it at.
Yes.
That's so the same. The rate the same. Okay.
Yes.
Then the next one to divide by 0.2 times 0.80 270. This department want to work there. Canteen expenses should be allocated on what day autonomous employees go there to get. So we have 140 within 120. I got 20. Oh yeah, figure sharp.
140,000.
140K.
Yes. Processing 70,000.
70K.
Finishing 105.
105.
Maintenance 70,000.
20K. Stores, the broke boys.
35.
35,000. And they carry last pass. Let's go. Maintenance expenses. Okay, we have gotten to that point where service expense is interwoven. All right. So in the question, they just gave us maintenance. They put it there. Stores and stores expenses. But what they are simply trying to tell you is that when you get to the point, be careful. Don't give anything to maintenance. Okay? Because you want to allocate for it. So it's a dash here. And you use the basis of apportionment, the apportionment rate given to you below to apportion maintenance. All right. So the one that puts dash for maintenance down, that's the one that you adopt to apportion your maintenance. Okay. So 35%, 2.78 is what?
973,000.
35%. 973,000.
Yes. Yes.
I will. Okay. Go ahead. Okay. 30%.
Finishing is 834.
834. 1, 2, 3. And it will repeat itself. 834. 1, 2, 3. We are skipping this one and we are moving to 5%. How much?
139.
139. 1, 2, 3. All right. What applies to store also applies to maintenance because these are the two service departments. Dash here, and let us share for stores. All right. So we're using the rate 25% on 1,431 million. 1,431,000.
357,750. 357,750.
Please repeat it.
357,750.
Fantastic. Farm. Oh yeah. Next one is 20%.
Processing is 286,200.
286,200. Finishing.
Yes, finishing. Maintenance.
Maintenance will repeat the same thing for Spinning and weaving. I saw it, 25%.
Yeah.
I omitted finishing. Oh, did the same thing. No, finishing again.
Finishing is
29,300.
Eh?
29,300.
Now, 429,300. So we are right. Okay, at this point, let us add up our totals. But then it's best you add up total for maintenance and stores, then reapportion them to the rest of the department. So let us do that. All right, so some maintenance for me.
Maintenance is 2,237,750.
2,237,750.
Stores is 944,000.
No, store is 1,155,000.
944,000. 944,000 now.
Yes. 1,055,888 naira.
It's up to 1 million.
Yes.
It's not up to 1 million.
It's
not up to 1 million.
You had the apportionment you did for the store. 1,000 added with the.
Okay, hold on. I know where you are going. I know why you are very fast. No wonder you are rushing. Okay. So let us apportion maintenance again. All right. So apply this apportionment rate for maintenance. Let us apply. If you can see my screen, please apply this blue tick. Let us apply it on maintenance again. All right. So 35% of 2,237,750. So let us reapportion maintenance across.
It's 3,212.5.
83,212.5. Here will I put it? Here, Abi?
No.
Yes. No.
Okay,
no.
So
that's
for the purpose of, let me remind you
73,212.5.
No.
783,212.5. Is this thing correct?
213.
Okay, round figure 213.
Yes.
Case closed.
All right. Processing is 671,325.
Okay.
Why the finishing is the same thing? The same thing.
30%. Fantastic.
Yeah.
We have here 671,325. Okay.
Maintenance.
Nothing will come here. What are we giving to this guy?
Store. We are giving store 111,888.
111,888. Is it correct?
Yes.
That's 5%, Abi.
Yes.
All right. So our new total for maintenance will be 0. While our new total for this guy will be what? So let's add up the total store now.
1,055,888 naira. 1,055,888.
55,000.
Wait. 1,055,888. Is it?
Yes. Where is it?
Thank you very much. Now let us reapportion this guy across board before we add continuous apportionment. So we are using the rate that I will mark with another color on my board, on my question page. I've used red to mark the apportionment rate. 25%, 20%, 10%, and 25% respectively. 25%,
63,972.
263,972.
Yes.
972. The next one,
211,178.
211,178.
316.
316,766. How many CCs?
Double 316,766.
766. Okay. Then there's the repetition. 263
Yes.
972. Correct?
Yes.
Okay. So at this point, there will be 0 here, and we'll have to reallocate this one. Abi?
Yes.
All right. So reallocate 263 972. So I want to clean up these workings. You already know how I arrived at whatever I did here. Up off, and I'm going to write for the purpose of the exam. You are going to do this first apportionment. You call this second apportionment. I think you go to the fourth. Alright. So let's go to the third apportionment. So for our third apportionment, what would be the amount for this is what we are allocating now? 263,972. All right, let's do that.
For spelling 9230.
923 what?
390.
390.
Processing.
Okay.
Processing 79,192.
192.
Same as finishing.
Same as finishing. What's the rate? Dash.
13,199.
199. We're heading there. Approximations will not put us in trouble. Because I've done 10,000 again. This is our fourth apportionment. We're almost there. Don't worry. We are almost there. Okay? So 13,000. Okay, apportion it.
300.
You know the rate you are using, Abi?
Yes.
Apportioning the last. Okay. What do you give me here?
3,300.
3,300. Okay.
2,640.
640.
3,960.
3,960. And the last one is 3,300.
300.
Oh yeah, let me pause and breathe first. Is everybody following?
Yes, sir.
Yes, sir.
One response. I need a female voice to answer me.
Yeah.
Okay. One more female voice. Don't be
Yes,
shy.
sir.
Oh, fantastic. Thank you very much. So, we'll do the last, although we can continue to go. I don't know how long I will continue to do this, but let's go again. We're giving dash to this. Our apportioning 3,300. Okay, so what do we have?
Hello, sir.
The question says we should make the last apportionment to spinning and weaving.
Spinning and weaving.
Okay, so we'll give the last one to spinning and weaving. So enough is enough, Abi.
Yes.
Okay. So we are giving this entire 3,300 to spinning and weaving. The point here we are.
Yes.
That's the last digit.
Sum up. If you need the full page, so let me minimize. All right. You can see there. So stop and give me this.
For with 5
Give me
million.
this one too. This is our can balance. Starter.
$5,986,925.
Hold on. Did you say 5 million for weaving?
Yes.
For
For spinning and weaving.
Yes.
Okay,
5,986,925.
986
925.
925.
5.
Okay, someone should add the total for me. I need it. Oh yeah. All right, give me the rest.
The other one processing is 5,024,534.
Next one.
5,000,542.
5,000,000.
019,542.
All right, this one should be 0 and 0, right?
Yes.
Okay, so what's the total? When you add 6 million to 5.4 to 420 to 278 1431. We don't have time. We can't sleep on this question. We have less than 1 hour 30 minutes to go.
16 million. 16 million. 31,004.
031
300.
1 2 3. If you add up
001.
No, that spinning should be 924, not 925. It's
Okay.
16,000.
this one,
Okay.
is
Yes.
this okay? So by the time you add up all these things, does it give you 16031?
Yes, I just did it.
Yes, sir.
Thank you very much for your time. Let's move on to the next question. Forgive my speed there. We don't have time to waste. Okay, so that way we have answered 20 marks questions and we are good to go. So the next one, marginal and absorption costing. May 2022 question 3. May 2022 question 3. Oh, the same year. So let's move to question 3.
Somebody is raising his hands.
Okay, oh, hands up in the air. Let me see you speak. Oh yeah, let me hear you speak. Talk to me.
Okay, please, I want to ask, is there any basis for us to apportion for us to apportion between the two service center? For example, now for this store and maintenance, is there any rule for us to that which one we are to pick first?
Okay, ideally, there's not supposed to be any rule, but you are just following. It just makes sense to follow the order of the question. They gave you one first, they gave you the second one next.
Okay.
So, yeah, maintenance came first, so you follow that pattern. Do maintenance first, do first, come back to maintenance, do stores, and so on and so forth. That way, you are not going to deviate from what the marker will do. Any other question? Olabisi, you want to say something?
No question.
All right. Question 3. Pakuris Limited is into manufacture of various products. The following data refers to one of these products for a 1 month period. Direct materials, story. Direct labor, story. Direct expenses, and so on and so forth. Prepare the statement of profit or loss using full absorption costing, using marginal costing. Prepare closing inventory valuation on both basis, state/explain the differences between A and B. Pakurus. I did not write this name when I was doing my practice. So, hey, sure I can like this. Okay, I found it. Absorption costing. For the purpose of Ican, as far as you are doing foundation, you will not be strange to what I'm about to say. When you hear the word statement of profit or loss, please take note, it is not profit and loss. So prepare a profit and loss account. That is not correct, because a company cannot be having profit and loss at the same time. It is profit or loss. You must have done it in your financial accounting. If you are not offering financial accounting in your foundation level, it means you studied accounting or you have a background in accounting. So therefore, you know statement of profit or loss. That brings me to the approach I want to use for this one. I'm using the approach of preparing your regular profit or loss account. That is how I love to approach any question that asks me to prepare a statement of profit or loss. Therefore, what you have as sales is your revenue. It means they sold 115,000 units for 25 million naira. So let us shoot. Implement of profit or loss, or your income statement and other comprehensive income as IFRS described it. You recognize your revenue, and the next thing is to do what? To recognize your cost of sales. In removing your cost of sales, you have some things that make up the cost of sales. Cost of sales comprises of your opening inventory, purchases, you less closing inventory, you arrive at your cost of sales. You know that what people used to do when you're doing your financial accounting. Then you deduct that one from your revenue and you arrive at what we call gross profit. When you are doing CVP analysis, it is that same gross profit as contribution. This same contribution now, we can use it in marginal costing. We can call it contribution because your CVP analysis is close to what you do in marginal costing, because you clearly distinct fixed cost from your marginal cost. Let me not confuse you. Let us go to the workings. In our workings, back to my writing pad, I have exhausted writing 1. Let's go to writing 2, now in writing 3. So again, I rule a tick line to indicate that, hey, this is my line. I'm done with that area of solving. So we are now in May 2022, question 3. See how you guys were so happy when we were solving this last question. That's the joy I want you to use when you face any other question in the exam hall. I want to tell you guys this thing. When you're in the hall, there's no question that is too big to tackle. Just look for the main ingredients in every question. And there is a main ingredient. What you do, if you can identify what you need to arrive at a solution, look for it in the question. Arrive at the solution. Ignore the plenty grammar. Sometimes Ican will give you things that are irrelevant to the question, as you could see in the first one we did. In the first question, we did not use any of the fixed cost to do anything. We needed only the marginal cost. In this case, if you are asked to prepare a full absorption costing, you know that you need your fixed cost. But a situation where they are asking you to prepare marginal costing, you know you don't need fixed cost. Just look for what you need and do what you need to do and go. Not all the information in the question will be required at the end of the day. Please take note so that you are not scared when you see any question. No matter how bogus, enormous, voluminous a question comes, there is always the easy approach to it. Identify what you need to arrive at a solution and you are good to go. So having done all the plenty grammar, we are not in an English class. Let us solve. So I'll start with your requirement 1, which says prepare a profit or loss, a statement of profit or loss using full absorption costing. All right. But when you are preparing full absorption costing, you know that it is the production cost that will form part of your calculation for gross profit. So therefore, anything that has nothing to do with production, we go down to your less expenses in your financial accounting. Then you now arrive at your net profit, if you remember. All right. So I know what I'm saying. So let us go now. Okay. So I put my Naira sign, half marks, secured. I'm rounding off to the nearest million. No, so I don't need to put a 3 zeros. So sales, you can call it sales, but I want to call it revenue because I'm an IFRS person. The modern day accounting, we call it revenue. And for the purpose of our totals, I'm going to use this last column to write my total sales figure, not in unit. I'm writing the amount. I recall 25.3 million. I'm not rounding up to the nearest thousands, like I said previously. Okay. So what's the next thing? Less cost of sale. Less cost, of sale. How do you arrive at cost of sale? This is cost accounting now. There's no cost of sale. Oh, calm down. What do we have in this question? We have opening inventory as nothing, but we have other activities that are during the period. Do we have a closing inventory? We have to look. We have to find out if we have a closing inventory, because we are told in the subsequent question that prepare closing inventory valuation on both basis. In that this question we're going to ask C first before we but don't be scared. Don't be scared. We'll approach it.
Sorry, the class we end in 1 minute. This section we end in 1 minute.
Don't worry. Don't be scared. Don't be scared.
Okay.
Don't be scared. Don't worry. If it ends, rejoin using the same link. It will bring you back. Okay. I don't know why the examiner sets the time like the OSA professional set the time like that, but if it ends, please join again. It will bring us all back. Don't worry. So opening inventory. Have any question clearly said opening inventory. Opening inventory is 0. All right, but we have what was produced during the period. So for us to arrive at that, we start all the so we're working with the value, ignore the units, and we have direct expenses. So direct EXPENSES. All right, so what do we have as direct material? 3 million. Then we have direct labor 66 and expenses 2 million. So 3 million, 6.6 million, direct expenses 2 million. All right. So if you add these 3 directs, there's a name for it. In your OBJ, they may ask you, what is the name?
Prime cost.
Prime cost. All right. So if you sum up this one, according to my head, I know there will be a 600,000 here. And my head says, so moving on, because we are doing absorption, full absorption, we are going to bring in the overheads. That's a variable overhead. That's the production, take note, variable production, fixed production overhead. So what's our variable production overhead? 1.5 million, fixed production overhead.
5 million.
So let's bring it, variable
6 million.
production overhead 1,500,000. I know this is some people's salary here. Don't know what people are looking for in this icon. Fixed production overhead 0.6 million. Some people's salary in this call. I know all of you. Okay, so if I add up this to my prime cost, I'm going to arrive at what we call production cost. My production cost is enough to, it's enough to form my purchases in this case, because that is what I did during the period. So what do we have if we add this up? My head says that 6 is 12 plus
16,700,000.
Yeah, Thank you very much. Remember, I put 1 naira sign in the middle. That's where I'm going to write this one. 16,700,000. Permit me to scroll up. If my handwriting is too bogus, please tell me to reduce it. That's right, very small. All right, so with less closing inventory. Closing inventory. And that brings us to question C. We are solving question A. Here. This is question A. So skip B. We'll come to C and return to A. So let's go to C. In your exam, you have different leaflets and different pages. So you can just flip to another page. Just do C. Then come back to answer the rest. You have enough papers to cater for all anyone to do. All right, so let's move to question C. Now, from the question, they say prepare closing inventory valuation on both bases. How do I know that I need to do closing inventory? Because as I was preparing my revenue statement, I got to the point where I need closing inventory. Then I came back to the question and I saw that we'll have closing inventory because the question had asked me that I should prepare closing inventory valuation. And again, if there are bases that will allow you to prepare your closing inventory, why not create room for closing inventory and work it out? All right, so what will be our closing inventory? Using absorption costing, they say use both bases. Using absorption costing, your closing inventory will be, first of all, you have your total production cost divided by the number of units produced. Clearly, we've had our total cost to be 16.7 million. The total number of units that was, why we have closing inventory? Another expo that will give you closing inventory is that you produced 120,000 units and you ended up selling how many?
115,000 units.
Fantastic. So we have 5,000 units as our closing inventory. So what will now be the value for that closing inventory? That is exactly how you know that you have closing inventory. No long story. So come back here, say, okay, this 5,000 units that is remaining, how much will it be? So take note, what you go back to do is, what is our production cost per unit? We have total production cost. Now, total production cost is 16,700. Therefore, what is the production cost per unit for 120,000 units? It's very simple. Somebody help me. We'll come back and prepare a proper closing inventory valuation in question C. But for the purpose of moving on in this particular question, someone should help me punch 16.7 million divided by 120,000 units. You will get your
139.16.
Exactly.
139.16.
Are you sure you are not approximating?
No approximation. All
right. Leave your calculator. Multiply it by 5,000. What would you have?
695,833.3.
Yeah. Okay. Can someone else verify this answer for me? Because my own calculator is telling me another thing. $16.7 divided by 120,000 without doing any other thing on the calculator equal to multiplied by 5,000. My calculator is telling me 695,833. Is that what you mean?
695,833.33.
Okay, then you are very correct. Thank you very much. 695,833.333. Don't worry. I've heard you. It's okay. All right. So at this point, we have arrived at our closing inventory. Any question around this closing inventory? It is looking somehow to some people.
Please, at the front of closing inventory,
yes,
can we do a little working at the front?
Yes, we can.
You probably can understand how we get.
Yes, so I will open a big curly bracket and I will say prod cost per unit. 16,700 123 divide by 120, and I will arrive at 139.117. Approximate this thing is 17. Please use this 0.17 to multiply 5,000 again times open bracket 120 120 minus 115 123 equal to use 139.17 multiplied by 5,000. This last three, I want you to change. I'm not comfortable with
695850.
All right, that is what I want to use. Don't worry. In the exam hall, you are free to do that because our figures are written in kobo. You know that thing is naira. 139 naira, 17 kobo per unit of production. So it is fine to have 50 here. Okay, then I can close my big mighty bracket to avoid confusion. Is this fine by you? Is this fine by everybody?
It's okay, sir.
Fantastic. All right, so what do we now have as our total cost of sales? We have cost of sales. Total cost of sales.
16 million,
4,150.
4,150.
Oh, 1, 2, 4, 1, 2, 3.
50. 150.
150.
150.
Yes.
Okay. All right. Thank you. All right. So when you less cost of sales from revenue, what do you have? Gross profit. Remember the cost of sales. We have 23,000 and 25.3 million. So if you deduct it from this, you have what we call gross profit.
That's 9,295. 850.
9,295,850.
Oh, sorry, 9 million.
Yeah, 850. Thank you very much. Finally heard the lady's voice. Okay. All right. So let me remove this question C. We'll come back to solve it properly. At least you got an insight on how we're closing inventory. At this point now, we can bring in the variable non-production cost and the overhead and the fixed non-production overhead. So in your financial accounting, you have what we call less expense. Am I right? All right, you don't need to tell me. I know it. All right, so variable non-production overhead, yes, then fixed variable non-production. Go 1 million 20 1 2 3 4 7 4 0 1 2 3.
5
So our
million,
total is
760,000.
5 million
760,000.
1 2 3. All right. Less these total expenses from your profit, you arrive at what we call net profit. So if you go
5,850.
yes,
5,850.
850. Thank you very much. By so doing, we have solved. It stops at net profit. There is nothing else to write. Yes, we have solved the question A of the A part of the question. So let's move to the B part of the question that says prepare statement of your loss using marginal costing. So the B part of the question using marginal costing, my naira signs as above, so below. Our revenue remains constant at 25,300. And we'll deal with all the direct. So direct labor and direct material.
And direct expenses.
2 million.
Exactly. So we don't have an opening inventory. Sorry. My writing pad again is telling me that Oga, please change me. I'm old enough. All right. So there is. So first of all, we say less costs of sale. Opening inventory. Direct math. 3, 1, 2, 3, 1, 2, 3. Direct
Invoice.
6.6. Then the next one is direct expenses, EXP. And we have here
2 million.
don't worry, I already saw these questions, so I can see from my solving sheet. 2 million, 1, 2, 3. All right. At this point, we can bring the variable function over.
Songs.
So variable production overhead. Variable production overhead amounts to
1.5 million. I mean 1,500,000. Yes.
1,500,000.
Okay. Right. So what is our total cost of sale? Which is the same thing as our marginal
13,100,000.
cost of production. 13,100,000. Okay. So because we also have another variable cost, there's another variable cost that is not a production cost, but it is also a variable cost. We're not going to do anything with fixed cost in this situation until we get to expenses. So our production cost, the difference between your absorption cost and your marginal cost is that in arriving at a total production cost, you consider every cost of production in the fixed overhead for absorption costing. But for marginal costing, your only concern is every variable expenses that you've incurred in your production process, and you completely ignore the fixed cost. That is the difference between your marginal cost and your absorption cost. If it is anything different from what you've already known before, please draw my attention and tell me that you are wrong, sir. Okay. Variable non-production overhead will come in here.
1 million.
20,000.
20,000.
This way, you arrive at your total production cost.
14,100,000.
2, 3. Right. So, at this point, we have arrived at that point here. Again, we'll do what? Less inventory, closing inventory. So in this less closing inventory, we'll go back to our drawing board. Remember what we did the last time? Where we said you divide total production cost by the number of units. So this time around, we are using the marginal cost of production. Marginal cost of production. That's what we're using. So I'll open my big bracket, very mighty bracket, and I'll say marginal what did I call the previous one? Okay, production cost per unit. Marginal crude cost per unit. Marginal crude cost. Hey. Sorry, my writing pad can be funny. Excuse me. My writing pad is disgracing itself. Ah, come on. Okay, let me just unplug and replug again. This thing is messing me up. Same thing now. What do I do? Sorry. All right. Apologies for that. I see how I was fighting with this barrier. Production costs per unit. Okay, so we have here 13,100,100 divided by 5,000. No, sorry. Divided by 120,000 is equal to what will be the marginal cost per unit?
109.166.
Okay, please let that 166 be 17.
Okay.
All right. Multiply by 5,000. What do we have?
545,845.
850.
Five, 4, 5, 850. All right, that's our closing inventory. Okay. If we close this closing inventory, we'll have a marginal cost of sales. Marginal cost of sales of all right, so deduct
30,574,150.
Okay. Deduct this. Don't mind my brackets from 25,300.
11,725,850.
All right. So this will be, I'll call this contribution. Okay. So let's deduct our fixed costs, both production and non-production. Fixed production cost over
3,600,000.
3,600,000 at fixed non-production
4,740,000.
4,740,000. What do we have? 8,340,000.
340,000.
Fantastic. So what will be our net profit?
3,385,850.
3,385,850. Oh, fantastic. That is the end of solution 2. Man. So we can now face requirement number 3, and that's a question C. This thing is becoming long though. Let me see what it looks like. It's long like this. Okay. Let me rule a line by the sides so that I'll make it wider. All right, let's go. So So I'll be answering questions here. Okay. So question C. What does the question say? Prepare closing inventory valuation on both bases. Very simple. It's exactly what we have done. This time around, you are coming to present it in a question and answer format. So you just come and say absorption costing basis for, absorption costing is the first one. Absorption costing basis for closing inventory. Just come and say total production cost divided by units produced. Should give you, let's say production costs per unit equal to total production cost divided by units produced. And this, you remember, we had 16.7 million divided by number of units produced, 120,000.
120,000.
We arrived at 139.17. This is naira per unit. This time around, remember, you are doing question and answer format. Then you come back and say unsold inventory should be equal to units produced. You want to secure maximum mark minus units what?
Sold.
120, 123 minus 115, 123, and you have 5,000 units. Value of closing inventory. Value of closing inventory is what? 139.17 times 5,000. That will give you what we had in the last one. 6,958.50. Under the same method, still question CO. So you now come and say, 1 minute. Marginal costing base. You can decide to call this IIO so that the examiner will know that you have moved on to another thing. Marginal costing basis for closing inventory. You come and say marginal production costs. You know, this time around you're looking for your full marks, so you are very careful with formula. Marginal production costs divided by, this is total, divided by units produced. Should give you cost per unit. Just call it cost per unit. It's fine. Nobody will sanction you. So here now you can say, I remember we said 13.1 million. 13.1 million divided by 120,000. Remember we did this already and we had 109.17. I remember. Then we said multiply, since we have already done unsold inventory above, it's very easy. Just come straight. The examiner will not sanction you. They know you know what you are doing. 109.17 times 5,000 equal to what? Am I alone in this class?
No.
No, sir.
All right. So what do we have? 545,850. I remember. 545.
545.
Is it not 850? From this, please correct me if I'm wrong. So that
Somebody
is
raised his hand.
Okay. Shoot.
Please, what's the net profit for under marginal cost?
Under marginal cost.
The net profit.
Okay. You want to confirm your answer? Can you see it? The net profit NP.
3,385,850.
Yes. Did you get the same thing?
I will do it later. I'll do it later. Thank you, sir.
All right. Please get the same thing so that we can pass the exam together. Amen. All right. So this is the value for your inventory using marginal costing basis. So now let's move to the last part of the question. We have wasted too much time on this question. State and explain the differences between A and B. Clearly, the difference, you find it in the net profit and in the closing inventory. So let's look at it from the net profit perspective. So question D, difference. You know when they say compare and contrast, they say the net profit for absorption costing was this. Meanwhile, the net profit for marginal costing was that. The difference is so and so. You know, that's the story they wanted to narrate, but put it in simple terms. So let's see the difference between A and B. From net profit perspective, net profit of A was what? He's looking at me by the side. Put my naira so that they don't mention me. 3,535,850. Net profit for B. I know I gave somebody the figure just now. Can the person remind me what I called for him? I know it starts with 3.
3,385,850.
850. Fantastic. What do we have as the difference? One is taller, one is shorter. This will give me 0, 0, 0. This will give me another 0. This will give 5. I borrowed 1 from here and it will give me 1. So let's look at the difference from the closing inventory perspective, because I remember that is another place where we did something. So looking at it from closing inventory of A, what do we have as a closing inventory for A? We had 695,850. 695,850. And closing inventory for B, I know we had 545,850. 545,850. What is the difference between these two guys? According to my head,
150,000.
it's another 150,000. Okay, I wanted to work it again. All right, so you can see that the difference between both of them came from closing inventory and went down to impact on net profit, because we're using the same data to compute our results. All right, so you can now put some stories if you want, you know, because you put variable costs here, you not put variable costs here, you put you know how to write your plenty stories. Please elaborate with your jargons, but make sure you show these two notable differences. On that note, I will entertain questions really briefly. Then we'll move on to the next on our agenda: budgeting and forecasting. have limited time. They don't want to bust your bubbles too much. They are giving you direct questions because they want to test your knowledge on contract costing. So let us approach it this way. Contract A is Fort Mainland Bridge. Contract B is the road linking Lagos to Alta. Materials, wages, expenses on site, plants purchased, accrued wages. As an accountant, you already know that accrued wages is like a liability. You have not paid though, but you recognize it as expense because you must pay in the future. Materials as at 31st December. Take note. When they say materials as at 31st December, automatically it means materials to be carried forward.
Out.
Value of work certified. Value of work certified is more like saying that in the total job that you are doing, we have verified that you have completed this portion of it. Then cash received on certified work is like we have made part payment for the one you have done. Completed work not yet certified. Completed work not yet certified is similar to your work in progress. You've completed it, but as far as they have not certified it, it's work in progress. Head office charges are portioned. It's an overhead spent at the head office. But because these are the two contracts that the company is making money from, they have decided to apportion their head office expenses to it. Plant value as at 31st December. If I have a tractor and I'm constructing a road, at the end of the year, the tractor will not disappear into the thin air now, or I will not write off the value of the tractor automatically because I've reached the end of the year. No, I will have a residual value for that plant and machinery, and I will carry it forward to the next year, and I will continue constructing roads with it. The contract value is 500 million for contract A and 350 million for contract B. You can see that the contract is a very good one, so it makes a lot of sense. We are required to prepare contract A and contract B account for Joy Construction Limited. As at 31st December in a columnar form. Show the profit taken at the end of the year and the balances carried forward. Show workings where necessary. Total 20 marks. Okay. Joy LE Construction Limited. Where did I solve this thing? In my solving sheet. All right, I don't reach there. Let's go. There's no time. Have you done in any of your financial accounting, whether it is in the university or ATS level, you may have come across higher this contract account. If you have done contract account before, it's the same thing. The concept is the same. Where you have done not yet certified, you carry forward, you profit on your contract. There's a file you use to solve your profit taking. I'm going to show you all of that. So it's the same. Nothing has changed from what you know before. Don't come and scatter your head because it's looking like what I don't know. So let us approach it. We're going to focus on the requirement. The requirement says you use a columnar format. The columnar form is just your T account, debit and credit. Draw a T account. There you have debit on this side and credit on this side. That's columnar format. But you can design it in a more modern way so that it doesn't look like the ancient accountant style of doing debit credit, So, but I'm an ancient accountant that will speed over to the modern generation. For that reason, I'm going to adopt the T format and I'll do the regular debit and credit. I'm trying to examine my workspace to see if I can still squeeze in the question by the side. And it has said, yes, please proceed and squeeze in this question by this side. So I'm question 3, 2023, May 2023. But first, I rule my line. May 2023. Question 3. I'm praying for all of you. Any question I can, as far as it is in my revision pack, please solve it and move on to other areas. I did not say solve it and go and sleep. Solve it and move on to solve other areas. Solve process costing, solve Invention, the FIFO, LIFO, I'm not going to waste my time on that. You know, that one is simple. Solve as many questions as possible, but do me one extra favor. Please, please and please. I know many of you are not good at cramming. Read the IT part of this topic, of this course. Read it. Good. It is their turn to be in my corner. So let's back. For contract A, let's from contract A because it came first. Contract A, we have already, you know, our solving for profit taking. So let me clean this one. Profit taking is equal to the notional profit is 1. Cash received for contract A is
109,000.
1, 2. The value of work certified for this guy is what? 140,
140,000.
Times 2 over 3. Any figure me
1,000. Okay.
1,000.
71.
71. Correct. Oh yeah. Contract B. Profit taking PT equal to, it's not part time. Oh, I say you just thought you part time.
25,000.
Wait, leave in the blanks. Okay, is it the blanks you are calling for me?
Yes.
All right, thank you very much.
76,500.
76,500.
500. Okay, divided by
102,000.
102, 1, 2, 3. Multiplied by 2, 3. What do we have?
12,016.
12,610. Okay, so Mr. Babatope, are you okay? Are you satisfied?
Sir, I want to confirm that formula. Why do we that 2 over 3?
Yes, it's part of the formula. Yes, sir.
Is there any explanation about how we come about that 2 over 3, sir?
No, sir. I did not see the derivative of the formula, sir. So can we proceed? Thank you very much. All right. So let's proceed. We don't really have time, so I can't be explaining too much. Apologies. Yeah. So so at this point, we'll bring in the profit taking. This is your normal profit that you know. You know, when you arrive at profits, when you are selling as a business person, you say revenue minus equal to here. The value of the work certified is what we have to edit. Contains the cost of the work certified in our profit. But in the profit, we don't want to recognize of it that the remaining part you don't have your. So we're trying to say profit takes like solved. I remember we had 1-0. Hope my remembrance is correct. Okay, so at the end of the day, if you still compare this total, which we are going to do now, of 140,000, 102,000, if you compare this total against the other side, you still have a difference. Because remember, we had a notional profit, and somehow, permit me to say we took 2/3 of it, even if what we took was not exactly 2/3. We did some other mathematics around it. So we still have profits not taken. And that profit not taken should be the balancing figure if our account must balance. Can someone give me the balancing figure? 819. I heard you. And the second one?
12,610.
12,610. Do you have any question as to how we got our balancing figure? I always put asterisks to the balancing figure so that you will not wonder what they are. Anywhere you see me put asterisk is a balancing figure. It is not in the question. We solved for it. Okay. So the question says, show the profit taken. Have we shown the profit taken at the end of the year? Yes or no?
Yes.
At the next balances carry forward. Right. The balances carried forward, we already find them paper. So we're just going to write them the bottom part. So let's start. Balance carried down for material, work in progress, and balance carried down for plants. Let us repeat on this bottom part. So material brought forward would be 2670, 7680. Work in progress brought forward would be 4450, 264. This question. Then last one, plant brought forward. Plant brought forward would be 152,800 and 62,400. On the credit side, do we have anything brought forward? Yes, so we do. We do. We have the profit that we did not take. Profit not taken is going to be brought forward because we will take it in the future. What we will take our profit. 819, 12, 610. Right. And what else do we have that is brought forward? The wages that we said is part of our wages that we have not really paid. That wages, it's a balance sheet item. I know I'm very far. Accrued wages is a balance sheet because it's a liability, a current liability. For that reason, you have to carry forward to the subsequent period. Are we together?
Yes.
All right. So 2610.
260.
You dare not close the account. You are done solving at this point. Don't close the account. Please. Just the question says show. When you close the account, it means you are trying to achieve something. You are showing now. You are not trying to achieve anything. You have achieved all that they asked you to achieve. Are we together? So at this point, we have solved contract accounting. My time is up. Oh. Now I want to make I go. Should I pack my load and go? Alright, so pick it from last. I'm going to pick inventory valuation, CVP analysis, budget, and forecast. Pick one. You cannot pick all. Pick one, let us solve and got it.
Budget and forecast.
Budget and forecast. Oh yeah, let's go photo. Do we have a comment session? We don't have a comment session. Can the admin open the group chat? Let us vote. Oh, do we have section? I see a chat section here. All right, please everyone send your preferred number. So again, the last question is ABC. That is modern management accounting technique. We have inventory valuation, variance analysis, we have C. VP and break even, we have budgeting and forecasting. Please pick the all right. We have one budget and I get at least 7 votes. Budgeting and forecast. This one said it's forecast too. Are you a Newcastle fan? All right, continue. I need 7. If no one else is going to vote, I think budgeting and forecast is leading the way. Therefore, we'll solve budget and forecast. If you are not a fan of budget and forecast, I'm sorry, but you must face it in the exam. Why is everybody left in? Are they scared of budget and forecast or they know it? Okay, everybody is left in. Looks like they know budget and forecast. I'm sorry, if you know it, you can teach the people that don't know it. But let us do it. Okay, someone is saying break even. Should I close the voting yet? No. More votes are coming in. Oh my God, more votes are coming in. Budget and forecast, you are losing. Break-even analysis is Thank you very much. Company income tax of 475,550 will be paid in the month of March. Cash and cash equivalent balance as at December 50276.
Hello, sir.
Yes, ma'am.
Sorry, the budget and forecast, is it cash budget we want to solve a question on, or we still have other questions to solve?
It's cash budget, ma'am.
Another topic.
Okay, you are good with this one, Abby?
Yes, sir.
Okay, who else is good with this one?
That's why I suggested
Because
with
it's quite
ABC. Cash budget is still at least.
very
So ABC or CBC.
Maybe we'll do sales budget, production budget, those usage budget. I was thinking that was what we wanted to do.
check for any of the past questions, check the year for usage budget and all of that. So maybe we can go to that. But those things are just basically formula where if you can master the formula for sales budget, production budget, and variable budget, cost budget, overhead budget, I think those things, they will not repeat itself. They are repeating themselves over and over again going forward. Because I remember when I was doing that was when you used to get your favorable and advanced now, right? Yeah, so I don't really see it much as a big deal, but yeah, you can also, you may want to bring a question for it. I'm waiting. So while we wait for the question, let's jump quickly to CVP analysis. May 2021. I just picked these things out to even say, oh, let me pick one. No. It was random. So May 2021. May 2021. Yeah, the questions. Okay. Cost volume profits. Oh, the question's grandchildren. All right, so cost volume profit analysis is used to show how cost and profit react to change with changes in the volume of activity. So it's like an extension of cost behavior. You remember cost and cost behavior, where you treated fixed cost, variable cost, mixed cost. Then you did cost separation. So all those knowledge will not be lost here. Yeah, still bringing them. into this question. So they say state facts are underlying of the above propositions. You already know now. Assumption means that there's another assumption about variable fixed cost per assumption variable cost per unit or the volume. There are so many assumptions around this thing. You may want to read them up. I can't really categorically start mentioning them. I'm not the one writing the exam, so I can't be cramming these things. Now let's move to the part that has 15 marks. Let me see. Yeah, the second part has 15 marks. So Sheke Manufacturing Company. You can see the name. I'm not the one that gave it to. Sheke Manufacturing Company sold 250,000 units of its products called Chain at 20 naira per unit. The variable cost of 15 naira per unit consists of manufacturing cost of 12 naira and selling expenses of 3 naira. The fixed costs incurred evenly throughout the year amounted to 486,000 naira, consisting of administrative overhead of 300,000 and selling overhead of 186,000. You are required to calculate one, the break-even points in units and naira, the contribution to sales ratio, the number of units that must be sold to earn a profit of 75,000. That's targeted profit. Then the number of units that must be sold to earn an after-tax profit of 112,000 if the tax rate is 30%. The number of units required to break even if the variable cost increased by 6% and fixed cost by 2.5%. Is this an interesting question? It can't be worse than this now, can it? Hello? Can't. Response. Thank you very much. Okay, so let's go to the back to our writing pad. Push a new writing pad for this second part, or we should continue with this one. This one looks overloaded though. I will be sending. Okay, yes, there's space at the top. Let's use the space at the top. I'll be sending this to you, so worry not. You will get the notes. The only thing you do for me is, let me see if I can send it to this call. So either you stay on the call, or I don't like sending it on WhatsApp. So because WhatsApp will really damage the quality. I'll be sending in form of image or PDF. But the last time I tried PDF, it wasn't nice, so I used picture. So if I'm sending it as a picture, I'll prefer to send it to your emails. So I will just send a link, a Google link that will gather your email data so that I can forward the materials to you, the notes to you. Okay. So we are doing cost, volume, profit analysis. But first, May 2021 question 1. All right. Let me put it there. CVP. All right, cost, volume, profit, and break even. So you know the rules. Cost, volume, profit, one of the simplest areas to deal with. Abi? Nobody's saying anything, no. That means all of you know it.
Yes, sir.
Yeah.
We don't know it though.
Okay, so who can give me the assumptions? Can someone just try and give me one of the assumptions? Because we may be working with one of it.
Variable cost is constant.
Variable cost is constant. All right.
Selling price is constant.
Okay. All costs can be resolved into fixed and variable elements. Happy?
Yes, all mixed costs are also analyzed to fixed and variable components.
Confirm. You guys are ready for the exam. I don't know why you put it to the revision class. But anyway, let's just do it. So the first thing that they require of us is to calculate the break-even points in units and naira. Take note, don't solve the question requirement. Always follow the question requirement. So what do you need to calculate break-even points in units? Given this data above, what do you need to calculate break-even points in units? First thing I would recommend is that you state the formula for break-even points in units. So let's move. This is question BI. Break-even points in units. Formula is fixed cost over contribution per unit. That's the unit. Okay. So because it is break-even unit, it has to be fixed cost divided by contribution per unit. So now we need to work contribution per unit. So what is contribution per unit? So you now come and say contribution per unit is equal to what? Remember what we did in the last example question, what we said sales minus
total variable cost.
Exactly. So selling price minus VC. Yeah. So you come now and say, back to the question, what is our selling price? You can see that the rest information becomes irrelevant in my head. I don't care about them. They said the company sold this at 20 naira selling price. Variable cost 15 naira. Selling price is 20 naira. Variable cost is 15 naira per unit. All right. So selling price, write it like this. So sorry. Therefore, my contribution per unit is 5 naira. We should have identified our fixed cost from the question. Fixed cost is what? Can someone tell me what the fixed cost?
400,000.
Oh, it's clearly stated there. 186,000 naira. Straightforward. 486. I know this revision class seems to be so simple, and it is sweet when you're in the hall. My brother. Okay, let's continue. Okay, so BEP units is equal to 486,000 divided by 5 equal to what?
That's 97,200
97,200 units.
units.
So this is your BEP in units. So now, what is the formula for BEP? Let me go further to this end and solve for BEP. No, let me not confuse you. Let me continue here. So continuation, break even point in naira. That's the same as in value. Is equal to fixed cost over, call it contribution margin. Is that what we call it?
Contribution per sales ratio.
Okay, it's the same thing as contribution margin. Okay, so let's call it contribution per sales ratio, but it's easier to call it contribution margin. Right. So how do we arrive at cont per sales ratio? So I will say CPSR is equal to, do you know what margin is? Margin is profit percentage of sales. right? While markup is, when I say margin, I mean profit. Profit as a percentage of sales is your margin. While profit as a percentage of cost is your markup. All right, please take note of those things. You use them for the rest of your accounting journey. Okay, so is the contribution of 5 naira. You can come from either the contribution side or from the variable cost side. There are two ways. If you have the variable cost ratio, you can now say 1 minus your variable cost ratio equal to your contribution ratio. Now you have your contribution as 5 naira. So contribution margin as a percentage of sales price, right? Times 100%. So 1/4 times 100, that's 25%. Are we together?
Yes.
Right. Any question? Any doubting, Thomas? Okay, everybody seems to be fine. So let us proceed. So our fixed cost remains 486,000. If you divide it by 20%,
1,944,000.
Big money. 1,944,000. Big money. So this is your break even in Naira. Yes, ma. Oh, yes, sir.
Please, instead of going through this long journey, can we just do break even point in units multiplied by selling price?
Yes, that's another way out. Break even points in units multiplied by 20 is 97,200 times 20. So at that point, I will say or BEP units are equal to BEP Naira. So even if it is shortcut, you must state this one first to. All right. So you now come back and say 97,200 multiplied by 80 Naira. Do we have the same thing? Can someone just figure me?
Same answer.
4, 4, 1, 2, 3. Okay. Fantastic. So for BII, it's contribution to sales ratio. Somehow we have done, but anyways, let's do it again. So I think I skipped to do that one. So what you do, for the purpose of answering this question, this is your answer for contribution to sales ratio. All right. So without wasting much time, I will move to the next one. The next one is number of units that must be sold to earn a profit of 75,000. You know, there's a formula. You add targeted profit to your fixed cost, then divide by contribution per unit, because they say number of units that must be sold. Okay. So the formula is for BEP. No. For targeted profits, you get what? Fixed cost
Plus profit.
plus profit. plus target, let me put it like this, target profit divided by
Contribution per unit.
contribution per unit. All right. We have this cost at 486. These numbers, please leave my head. 75,000. Oh, sorry, I said 750.
Yeah.
5,000 divide by 5. What do we have?
That's one.
Total of
112,200.
112
200.
200. Yes. Units.
Okay. So the question says units. You can now expatiate units that must be sold. You know, to get a target profit of 75,000. Yeah. So that's it. Please be very explicit when you're answering questions. Explain to the examiner like you are teaching him. That way they are very sure that you know what you're doing. They won't deny your maths. Okay, back to the question. The number of units that must be sold to earn an after-tax profit of 112,000 if the tax rate is bang, 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 bang. Remember, there's a formula for that one. So that is, we've done I, this is triple I, this is IV. The profit for this one is, so for after tax needs to be sold, unit is sold for after tax profits is equal to, oh yeah, somebody should help me. Fixed cost, I don't know the formula. Fixed cost plus target profit
All over total contribution.
all over.
Contribution per unit.
Oh. That's not all.
Then you convert profit after tax to profits before tax. You say PAT over 1 minus R equals to P.
So let's do this. It says divide by 1 minus